Hi everyone and welcome. I'm Steve Johnson, Chief Investment Officer here at Forager Funds, and I'm joined in this short video by Analyst on the International Fund, Chloe Stokes. Hi Chloe, how's it going?
Hi Steve, well thanks, how are you?
Very well, thanks. You've been working from home for longer than most of us. You came back from London at the start of this crisis and we made you isolate from the beginning. How are you handling working from your house?
It's pretty good actually. I'm one of the lucky ones who can do my job from home, and I also have a very quiet apartment to do it from, so I can't complain.
Getting plenty of work done, that's for sure. You've been with us for 2.5 years now and have just experienced your first market crash. How's it felt from your end?
It's definitely intense, but it's exciting as well. It's given me the opportunity to look at some stocks that wouldn't usually pass the valuation filter for us.
But we know markets crash. There's a long history of that, but have there been any surprises at your end from working through one?
Definitely how quickly you need to move to take advantage of an opportunity, especially in the higher quality businesses. If you start looking at a stock when it's already cheap enough, it's likely you'll miss your chance to buy it.
Well, that's been particularly the case with this crash. They're all different, and that's why they happen. I think everyone prepares for the last market meltdown that we had, and it's the things that come from left field that surprise you. But both the speed of the meltdown and the speed of the recovery have been unprecedented in terms of this crash. So you have had to move very, very quickly. Just starting for you with the stuff that we've already had in the portfolio going into this, you cover a couple of businesses that have borne the full brunt of the economic shutdowns happening around the world. Can you tell us how they are faring?
Not very well. Both our retail stocks, Ulta and Hallenstein Glass and Holdings, will take huge hits to revenue. Discretionary retail stores have been completely shut down in both the US and New Zealand. And in New Zealand, even online fulfillment is closed, except for products deemed as essential. Landlords will need to be pretty pragmatic throughout this period, but both Ulta and HLG have strong balance sheets. So I think they should survive and probably even thrive out the other end of this.
Just some of the signs of strength from these businesses. Hallenstein, we're talking about their Glasson's website is operating, but they can't do the fulfillment, and they're being very clear with people that they're not going to be able to deliver while the country's in lockdown, but they're still getting orders, people banking things up for when it ends. I think that's strong. And then also at Ulta, you've seen the CEO make some fairly extreme moves here to try and hang on to staff first, and then in terms of her own sacrifice. Some people would say she gets paid millions of dollars a year. She can probably afford it, but I think it's a really strong sign to see a CEO do what she's done. Can you talk us through some of the things that have happened there?
So companies who can best look after their staff throughout this period should be very well placed. They're going to need those staff once stores reopen. And as you mentioned, Ulta is a great example. Unfortunately, Ulta employees will be temporarily furloughed from 19th of April. But they were paid in full for the first month of the shutdown. And CEO Mary Dillon has decided to forgo her base salary indefinitely. She's also personally donated $500,000 US to Ulta's charitable foundation, which provides monetary grants to Ulta staff going through financial hardship, which they've extended to cover coronavirus impacts.
I think it's a really good sign of the culture at that company, and it's one of the reasons that we invested in it. But there's another long-term trend here that's been favourable, and that's the demise of department stores and the trend towards specialty retailers. How do you see this whole saga impacting that trend?
So department stores have been struggling to stay relevant for a while. They've been losing share to online as well as to specialty retailers, just anyone who can improve the retail experience to consumers. I think this crisis has just accelerated that process, and department stores are going to really struggle out the other end of this.
You've also been looking at the retail property trusts like Unibail, Westfield, Simon Properties, Scentre Group. They're trading at massive discounts to NTA. The share prices have been pummeled, both leading into and through this crisis. If they could ever get back to paying last year's distributions, you're looking at huge yields on today's equity prices. What do you think about those as prospective investments?
It's complicated. The sector's changing for sure, but I don't think destination shopping centres are going anywhere. And Unibail and Westfield in particular have a history of doing them really well. Today's prices look very attractive. As you mentioned on last year's distributions, you're looking at a 15 to 20% yield today. The financing structure makes it complicated though. while all of them are trading at massive discounts to their net tangible assets, they have lots of debt and they've used reasonably low cap rates to value their assets. On top of that, they're pretty complicated structures, which makes it a bit of a buy on trust.
Like a lot of other things that we've been looking at, share prices have bounced very hard in that space as well. It's probably been the lesson of this meltdown. Anyone who was waiting around has missed the opportunities. Here, we've done little bits and pieces in the stuff that we already know. And I think that's always the way to deal with market meltdowns, is to focus on the things that you know and understand, and increase your exposure to those businesses, and then look around for the new ideas as well. We probably haven't done as much as we would have liked in the space, but who knows? Maybe we get another chance. Thanks, Chloe.
Thanks, Steve.